I probably had close to a seven-figure trading account. And at this point, I was like,
oh
how am I going to grow
gosh.
this account so I can retire?
Oh no.
Every $10 that stock was going up, I was losing $100,000.
Oh my God.
Keith is a self-taught momentum trader who has been in this volatile business for over 14 years. He has experienced some of the biggest bull market rallies and sector hypes. And here's the secret. He has made millions and lost millions using only indicators. Recently, I've had the pleasure of sitting down with Keith and talk about his trading journey. I was surprised by the very unconventional strategy he used to make 7 figures in one trade. The trade he took was one of the most volatile and shocking events that I've ever heard from a trader. Before we hear from Keith's story, I want to remind all my traders that you should always trade with proper risk management that's suitable for your account and risk tolerance. In 2018, there was a particular sector that had a huge bullish run that year, the infamous MJ stocks. These stocks were gapping out overnight, creating momentum for traders to buy the dips and sell to the moon. Also guys, there's no MJ or 420 around here. The only greens on this channel are the green P&L curves, hopefully yours, Humble Trader's favorite Lamborghini, and the like button. Remember to smash the like button now.
Could you tell us a little bit about your biggest trading wins and the biggest trading loss? Anything that stands out as the most memorable?
There's a couple big ones that are memorable, obviously, because of the size of them. So, it was probably an oversold bounce on Canopy growth. So this is probably towards the end of the MJ heydays, where everything was selling off, and multiple days of double-digit red days. And so I'd play oversold bounces, and this is probably my bread and butter is when things are falling off a cliff and they're kind of dropping like a knife. Trying to evaluate when this bounce is going to happen, because when the bounces do happen, they're often very sharp and they're in a double-digit percentage gains as well. So Canopy growth was selling off. I think this is probably, I would say, the end of 2018. I would say October 2018. And so Canopy was selling off, and it was setting up for a gap down day. And the way I prepare for oversold bounce is I don't sleep.
What?
I don't sleep. And then the next morning, I can't even say I wake up, right? I'd be like kind of just on the couch preparing for my big trades. And I knew this was going to be a really big trade, because I knew the Canopy growth pre-market was gapping down. At this point, I started options trading. So I trade a lot of options. And even to this day, I trade a lot of options. And so I was scouting out the different strikes that I wanted. And I was going to play weekly options to take advantage of this oversold bounce opportunity. And so at this point in 2018, so 2017 was when I seeded my account again throughout this big MJ run. And then towards the end of 2018, I probably had close to a 7-figure trading account.
That's when you exited all your swing trades on the way up.
That's right. Yeah. And then so I'm managing this large account now, and I'm sitting there and be like, how am I going to grow this account so that I can retire? And at this point, I was like, how am I going to grow this account so I can retire? At this point, I still had a job, right? And be like, and I'm like, well, this is a really high probability setup. I've seen this before. It's happened a million times. Every time I've seen it, it's always bounced. And always is a bad word, we know.
Almost always.
Almost always bounce, because you're gonna get punched in the face. It is one day. So I had so much conviction in this trade. I knew the setup. I've seen it before. I talked to everyone. At this point, I was also in another trading group. I talked to these other people. They confirmed. Now that increases my bias. But personally, I know, and I had conviction in this trade. So 6:30 our time, market opens. I'm spamming the buy button on some of these options, and these are weekly options. My broker, Questrade, just gives them a little bit of advertising here. They only allowed me to buy a certain amount of options at a time. And so trying to buy almost a 7-figure amount of options was took me almost a couple minutes just hitting the buy button.
Okay.
And so I was all in on options.
Oh my God.
On my account on an oversold bounce play on a weekly option.
Well, do you remember the strike price?
I don't remember right.
Calls, right?
Yeah, they were all calls. They were all calls, and so like I think I had 2 different strikes. One for the current week and one for the next week.
Okay, but it's already short term.
That's right. And I'm sitting there with a few $100,000 in call options, and I'm sitting there. I'm just like, okay, I bought it all. I know what's supposed to happen. I shut everything down.
What? You did not. You shut down your charts?
I shut down everything.
Oh my God.
I closed my computer.
I'm like sweating now.
Yeah. I shut down everything.
Oh no.
And I took a 2-hour nap.
What? No. Oh my God.
I was like, but that was my trading strategy. And I was like, this is going to work out or it's not. Because the probabilities are it's going to work out. So I don't want any sort of small term fluctuations in price to shake me out of the trade. Because I know what's going to happen. I know this chart's going to bounce. I don't even care if it gets a new low, because even if it does, this is going to bounce. And I took my 2-hour nap, and I actually fell asleep because I didn't sleep that night. I woke up 2 hours later, and my account was up close to a 7-figure number.
Oh my God.
And I'm sitting there and just like, all right, let's hit some sells. Right? Like,
so you start spamming the sell button.
I started spamming the sell button, right? Like,
oh my God.
And I only sold like a partial amount of it. I swung it into the next day, thinking that we would get some continuation on the bounce because these bounces usually get some follow through.
Yeah, because they sell out for multiple days.
That's right.
And bounce for 1, 2, 3-ish.
That's right.
Days.
That's what I was expecting. Except this one bounced into a freaking triangle.
Oh,
so the next day it didn't gap up, it didn't do anything. Instead it started consolidating again. So I actually lost some of that back to the market. But that's the price we pay for trying to have some risk on so that we can get continuation in our moves. When you're right, you want to let some of it mature. And that's my trading philosophy. And so I don't sell it all. I'll take some of it just to lock in some of that gain. So at least I stay on a winning trade. But this particular trade, I gave back a decent amount because I swung a major portion of it and lost it back on the next day. Lost some of it back the next day. Yeah.
Do you remember those options? What percentage were you up when you were selling some of it?
So I was all in. So it was only like I actually took. I was all in on options. I was all in on options. And I would say the percentage probably wasn't very like it's not like 1,000% or anything. It was between 100 to 200%.
That's still.
Yeah,
that's still pretty good.
Yeah, it was pretty darn good. If I took a strike that was slightly further out of the money, I probably would have gotten 400, 500%. But I took something more at the money, and actually some of it that's in the money.
Right.
That's
good. I think.
Stay it on. Because I'm all in. Like I want to be err on the side of caution. Like if this just moves sideways, I'm going to lose everything, right? But then again, at this point, I still had my job.
That's true. I guess you had a backup plan.
I had my backup plan. I didn't quit my job. I didn't, and most of this was house money. This money I didn't have a few years earlier, right?
Were you married at that time?
Not married. I was still not married at the time.
Do you think if you were married, you would have taken less risk?
It all depends on your life scenario, right? If you don't have a job, if you're trying to make it big and you're trying to trade full time, and you don't have a job, it makes it a lot more difficult because you still got to sustain your lifestyle.
Yeah.
You still need to pay a mortgage. You have expenses to pay.
Yeah.
And so all those things put pressure on your trading. If trading is your sole income source, right? So because I had a job, I was able to take that kind of risk. Today
the all-in risk.
Yes, all-in risk.
Would you do that now today?
No, of course not.
Okay.
No.
With the kids, with the house. Yeah.
I have dependents. There's bills to pay, right?
Yeah.
And last thing I want to do is go back to working. I would have failed as a trader if I had to take up a job again. So,
so on that trade, how long did it take for you to exit all of your options?
That was probably 1 week. A 1 week trade. Yeah.
Did you swing?
Maybe
Did
even
you
less than
roll
that.
to the next strike for next week, or you just
No,
sell
that was
the?
it.
Oh, okay.
That was the trade, and I
Okay.
kind of like basked in those gains for a little bit. Like when I'm talking about emotions, like I was ecstatic at that point.
Oh, that's
but
your biggest win at the time, right?
Probably my biggest win at that time.
Okay.
And actually, I would say it's my biggest win still ever.
Okay.
And
That was
and-
almost seven figures. then,
Almost.
You said because you went all in on your account.
Yeah, but we win some, we lose some, right?
For
So
sure.
like when your wins become that big, your losses become just as big when you're starting to make the same types of risks. And so everyone wants to live in the dreamland where you're making like that kind of money every day, but like it doesn't happen. And
No.
and this is what I talk about. Like it's hard to talk to a lot of people about this stuff. It's because they look at that and say, wow, you could really retire off that money. Like,
Yeah, you can just do this every day, right?
why don't you go out and buy a boat, like, or buy a few more condos? Like,
Yeah.
no, I can't. Like, if you want to truly retire, you have to financially plan for the rest of your life because you don't have any other income source.
Yeah.
So you gotta, whatever you have in your bank account is whatever you have, and you gotta live off that for the rest of your life. It's a different psychology when you don't have a job.
Okay. So now you took your biggest win ever
Yep.
in 2018, right?
2018.
Okay. So let's talk about your biggest loss now. Is that on the tech stocks or also on the MJ stocks?
It was on GME.
Oh, wait, what?
Yeah.
Were you long? Wait, were you long or short?
your viewers are not gonna love me over this one.
Were you
but, like,
long or short?
I was short.
Oh, that's why.
I was short.
Oh no.
And it wasn't
2021, right? Yeah, January 2021.
wasn't okay. So that was the first run, January 2021. It was the second run
Okay.
that got me.
Oh,
And
I see.
I can explain. I remember that day very clearly.
Oh, I think I know which day you were talking about.
March 5th.
It either made a lot of people or broke a lot of people.
February. End of February. GME had its second. GME went to $500 or something.
Yeah.
Consolidated. I shouldn't even say consolidated. It sold off, and it hit $40.
Yeah.
And from 40, there was one day in the end of February where it rocketed back to like $170 after hours.
Yeah, I remember.
So, middle of the day here, I forget which day in February it was, but it was towards the end of February. And preceding that, I think it's good to know that I was having a great year so far in 2021. Absolute breakout year because everything was just running in the early 2021. And so that played well with my trading style and my strategy. Momentum.
Yeah,
Everything
for
momentum
sure.
trade. You just literally wake up every day. Sometimes I can't even sleep because I'd be swinging again all in on my account on these.
All in.
Yeah. It was stacks of 10, 20, 30% gains every day. Leading up to this GME trade. And so GME was breaking out from $40 middle of the day. I can't remember which day it was, but your viewers can go take a look at it.
I remember that day from 40, it went to 35 first.
Yeah.
And then it started bouncing near the end of the day.
Volume
like you
started
said.
increasing.
Yeah.
All green. And it was just increasing. Now, being the trader I am today, and I actually should have known this before when I was trading then, is we're getting increasing bull volume. The candles are all green, all Maribozu candles, every single one that closed, 15-minute, 5-minute, 15-minute candles, all green. And it was just starting to go parabolic.
Yeah.
And I was like, all right, this can't possibly go from 40 to 100 in a day. So I started opening naked puts
Okay.
on $100 strikes.
Okay.
And I started selling, I started writing contracts.
Oh, you were selling puts.
I was selling puts. I was writing contracts.
Okay.
Big mistake number one, right? Like,
Yeah.
I'm always going to learn from it. And I've had a previous big loss. The loss previous to that was probably like a $200,000 or $300,000 loss on writing puts on Facebook earnings. And Facebook tanked 20%.
Yeah.
A couple of years prior to that. So that was my biggest loss until this loss. Again, another loss from writing contracts. And every time the price rose, I sold a little more. I wrote a little more. Until probably towards the end of the day, I think GME was being halted throughout that day.
Yeah.
Every
I think
5
close
minutes.
around 70.
That's right.
Something like that.
70 or 80.
Yeah, something like
Yeah.
that.
So it was halting every it had 5-minute halts.
Yeah.
So on and so forth. And then probably towards the end of the day, it was it was 14 minutes left to the trading day. It went through another halt. And I was like, okay, I got to close this position. I'm closing in on a 6-figure loss, right?
Yeah.
On this position. And it halted one more time, 14 minutes left. And then I was like, okay, I'm going to close it after this halt. But the halt didn't end until the market closed.
Yeah.
And now I'm stuck with these. It was a 15-minute halt.
Oh my God.
With 14 minutes left to the trading day.
Yeah.
And now I'm friggin' swinging these contracts here.
Oh my
and you know what happened like after hours on GME?
Yeah. It went to 100.
It went to 170.
Yeah.
That, like, so and I had a significant amount of contracts. So I'm sitting there and I'm just like, oh my God, I'm in a bit of trouble here. And I'm like, okay, I got to hedge these contracts. I gotta buy stock.
Yeah.
I gotta buy stock. But at that point, Questrade, my brokerage, had froze my account.
Oh, because you were too.
You
were all in on the puts.
No, I wasn't all in. All in. I had enough to cover.
Yeah.
But the margin requirement on the contracts went up exponentially when GME started going up.
Yeah.
So all of a sudden, my account doesn't have enough margin to keep those contracts, and so they didn't allow me to trade. It actually said on my brokers, I was like, okay, well, I'm a bit hooped right here, right? And then meanwhile, I got my chart. I'm just watching GMEs continue to rocket. I'm just like,
oh no!
Every $10 that stock was going up, I was losing $100,000.
Oh my God!
And I was going up $10 every like few minutes. And I was sitting there. I'm I closed it all down. I'm just like, I went to my couch, and I just sat there for a little bit. And I was like,
oh, shit.
I'm just thinking like, okay, what do I do? How can I handle this?
This is 2021. You were married by then.
I was married by then.
Yeah. Okay.
So a bit of a problem going on, right? And so I had confidence that it wasn't going to stay at this price. The next day it did tank, but I had a problem right now at that point.
Yeah.
And I couldn't even hedge it.
Yeah.
And so the head honcho at the brokerage firm gave me a call.
Oh, wait, Questrade gave you a call?
I'm looking at my phone like, Questrade's calling me. I know what this is about. I pick up the call and they're like, hi, is this Keith, right? And I'm like, yes, I know what you're calling about. I know what you're calling about. I need some help. And they're like, all right, we see your account. I have my other trader here. So there's 2 guys on the phone with me and we're like, so how do you want to handle this? I'm like, I need to hedge. I need you guys' help to help me hedge this. So here I am. The guy is like, okay, we're gonna open it up so that you can hedge your options. And at this point, the options were, the delta was pretty much 1-to-1. So all I had to do is do a bit of calculation to see how many shares I need to hedge. And it ended up buying pretty much. I hedged the entire position after hours.
Oh, okay.
Yeah.
How many shares did you end up buying? Do you remember?
8,000 shares at $100 something.
At $100. Okay. Oh, okay.
Yeah. So it was a lot because I wasn't expecting those contracts to go. And these are big numbers, but I think my emotions at that time were pretty wild. But I handle adversity pretty well. But every time there's a new record that gets set, you're into new territory on how to manage those emotions. It's safe to say right now, there's no really big loss that phases me anymore. It's just management of numbers in your account. But yeah, at that time I just sat there. I was like, all right, the entire position is hedged.
Okay.
I put down my phone. I just kind of sat there and took a breath. I'm like, and then I pulled out my calculator. I'm like, okay, what's this loss looking like?
Oh, right?
No. What's this loss looking like? And it wasn't quite a 7-figure loss. I think it was maybe let's say $600,000, $700,000 loss. But what happened in the ensuing days was that I did a bit of revenge trading. Ended up converting that to a good 7-figure loss.
Okay.
So it was, I'm still here today. I'm still trading, right? I've recovered.
I'm glad you're here.
I've recovered from that, but I think I don't think, this is my bias towards my own bad trade, but I would not have ever swung that position. I was closing in on, a good 6-figure loss. And, at that point, this still wasn't my biggest loss ever. I was fully intending on closing that position. It would have been idiotic to swing that position, but they forced, because the way the halt ended up, it forced me to swing it. And then I was all of a sudden big, like hot water.
Yeah.
So I think, the number one lesson here to be learned is, never write naked options. Always have some sort of hedge involved. And if you were to play options, always buy them. Don't write them, right?
So did you close out that trade and the hedge the next day?
Oh yeah, I was closing it. It was kind of like hand in hand. Close. And that's how I ended up with like that.
Good thing you hedged. Like it probably helped a bit, right?
Oh no, I hedged at the top.
Oh wait, I think it didn't gap up next day.
It did gap up, but so after hours I started hedging when it started, almost started
100.
peaking.
Oh.
At that point I didn't care. I'm just like, I'm just gonna hedge this. I don't really care what it's at.
Yeah.
It's already a monumental loss. But if I ended up swinging, if I didn't take the hedge, I probably would be okay. But then the scary thing was, the guy on the phone was like, okay, well, you don't have to take the hedge, but this is where we would close your account.
Oh, wait, really? After hours, they can do that?
Yeah. Well, they wouldn't close my account, but they were like, this is where you go bankrupt. They told me a number, right? Like, and then I was okay. I was like, there's no way it's hitting that like after hours. But then, at that time, you don't know what's going to happen to GME. Like, we've seen what GME could do.
Yeah.
So I was like, okay, let's just hedge it. Like, I'd rather trade another day than to leave it up to risk or chance that I'm going to, potentially bankrupt. So that was a very, very scary day. In my trading career because I made a pretty bad mistake. And it was against all my principles. It was against a lot of the things I did. And I think, the primary reason why I took that trade was because I was having such a great year.
It was risk-on environment
I was like,
too.
it was a risk-on environment.
Yeah.
I was like, okay, I could probably take a bit of risk here and I could, open it up. And it was at that time, it was a harmless trade. It was trading at like 60. I opened up, I wrote contracts for 100 calls and it was a good 60% away. And I was like, all right, let's just take some premium here. And the reason why I wrote contracts is because this strategy has worked well for me in the past. Until something like this happens.
Yeah.
It wipes out everything you've made in the previous however many years and then some, right? And so, I would say to traders like, we're nothing like these market makers that write contracts. These people have endless pockets. We don't. Like they can take big losses from people who want to make big bets. But, if you're writing contracts, like, one day it's going to come and burn you and bankrupt you, right? So, I would say I'm lucky. I don't like to use that word very, very often. I would say I'm lucky that that I had a pretty good year. I was able to absorb that loss. Okay,
that's good.
And I was able to bounce back from that, from my trading experiences, and really work towards higher highs.
Yeah, I think 2020 and 21 were the first years that it became so common for brokers to adjust margin maintenance requirements for individual stocks, like intraday.
Yeah.
That's never happened to me before. Like usually, it would be like, from 25% to 50, but with a lot of these, like 25 to 100 intraday.
A few hundred sometimes.
Yeah.
Yeah.
So
it was insane. It was crazy times. So yeah, I think, I'll never forget that one. I actually haven't had told a lot of people about that either. I guess until today.
Did you tell your wife about it?
Oh yeah, I told her. Okay. I immediately got out into my car and I drove and met a friend and I sat there, another friend that day trades, and I just sat there with him and I was like, okay, I took a really dumb trade today, right? And he guessed exactly what I did.
Oh.
And he even guessed what strike I took. He knew me. He knew how he knows how I trade.
Knows.
I was like, how the heck did you know? Like, so anyways, at that point I was like, okay, I'm still alive here. Let's move on. I took a week break and I just kept trading, and I'm okay. I never took that kind of risk ever again.
Yeah.
And just grinded my way back up. So again, just focusing on what I do best, and never never doing stupid things and taking idiotic trades, right? But you know, it's hard to not do it when you're on a roll.
Yeah.
When you're on a roll and you feel like you're at top of the world, your emotions are not really in check. You're not 60-40 is something I always explain to people, and that's what I was taught, is when you're having good days, you know, you want to be on a 60% happiness level, because you're going to have bad days eventually, and you don't want to feel like you're on the edge of like a bridge and not feeling great. So, you know, be happy, but not be that happy when you have big trades.
Yeah.
Because there's going to be bad days, and you don't want to be that sad when you have sad days or bad days, right? So keep emotions in check, and that's how we can keep our trades in check. And at that point in time, definitely my emotions were way past 60. You know, on the upscale, and then when I took that big loss, it was way past 40.
A lot of lessons to be learned from, I guess, both the wins and the losses. Yeah.
I would say losses matter more, because they actually they develop laws in your trading. Laws, you don't break those laws. And
so after that, you haven't wrote any naked contracts since?
No.
Or just like a smaller amount?
No, and if they were naked contracts, they'd be hedged. So it would be a strategy versus just you know, one directional trade.
Yeah, just a YOLO.
Yeah, no, it's definitely. I would never do that again, and I recommend it. I don't recommend anyone to do it. And you know, people have asked me before, it's like easy money, right? Like writing contracts.
Ooh.
Yeah, it is easy money, but until you get hit in the face, until that 0.1% off chance that something bad happens, and you know, news comes out, and all of a sudden you're thousands of percent down. Could be thousands, right?
Yeah,
and so
for
it's
sure.
Never write naked contracts. Buy them. Don't write them.
I'm not gonna lie, I'm like sweating after that story. I was sweating the first time when you told us about your biggest win ever, when you went all in. I'm sweating again with the GME
There's a lot of sweating.
Yeah.
I hope Keith's story offers you a different perspective on the reality of trading and how stressful it could be, whether you are making money or losing money. To me, the most valuable insights that he shared was his reflection on the past wins and losses, and how he managed his emotions at different stages of trading. In the full podcast, we talked over an hour about his trading strategies, his secrets to using technical indicators, and how he managed to grow his account exponentially to eventually becoming a full-time trader. If you're interested in watching my full conversation with Keith, do let me know by leaving a comment down below. If you want to learn even more from a pro trader, you should check out this video over here.